small business owner, remember the tortoise and the hare? Slow and steady wins the race.
We started Turtlesmith to help people start small businesses, providing information and resources to small business owners and entrepreneurs.
Build a solid foundation and forge your dreams.
Hey, welcome to Turtlesmith Live. I am Scott Hess. I am a tax and business consultant. Alongside me is John Barton.
I am a serial entrepreneur.
Yeah.
I guess you would say that now.
It's a great one.
Is that what I am now?
I think that's your title, official title.
Yeah.
Yeah.
Do you know that I sold my first company, or I sold my stake in my first company, and I went to work for one of my former clients, and on my business card, it said Minister of Propaganda.
Yeah. Yeah. Well, we're the co-owners of Turtlesmith. We are kind of a small business development team.
Mm-hmm.
We help clients with taxes and accounting and payroll and bookkeeping, that kind of stuff, market and brand development. We're getting ready to, I think, do insurance pretty soon. So We're kind of expanding to be a one-stop shop for small businesses. But that's kind of our goal, is to help people start small businesses, live their dreams, stop working for the man, and just deal with all the stress of a small business.
Yeah, we want to help people who want to be independent. We want to help them, build a solid foundation.
Mm-hmm.
One of the things we say often is get rich slow. So you build it slowly. You build it up in a way that is unassailable practically.
Right.
So.
Right. Well, typically we recap last week's podcast, but we didn't have one last week because it was the holidays and all that.
Mm-hmm.
So I thought we'd just talk a little bit about some of the new tax changes that are coming around. Trump has done the One Big Beautiful Bill, a ridiculously named thing, but it has a lot of tax changes for tax year 2025, which people are going to be preparing soon, all the way through 2028. And the big headline that everybody's talking about is no taxes on tips or overtime. And I thought we'd discuss that a little because it is not as it would seem, unfortunately.
It never is with the government.
It never really is. Taxes and overtime are still subject to FICA taxes, which are Medicare and Social Security. Medicare being 1.45% and Social Security being 6.2% of your wages. Just withheld right off your paycheck. You usually see that. Tips and overtime are not tax-free. You actually get a income reduction or deduction on your tax return. And tips are deductible up to $25,000, meaning $25,000 in tips can be taken off of your taxes. And overtime for a single is only $12,500. For a joint filing couple, it doubles to $25,000. But it's not exactly no taxes on tips or overtime. It's just an income reduction. Like you do a deduction on your taxes. So your paycheck itself might not change that much. And then when you file your tax return at the end of the year, hopefully you'll get a little bit of a refund, but it'll lower your overall income.
So basically it's lowering the amount of income that you state.
Correct.
That you would pay taxes on.
Well, you still report the full amount, and then you deduct the portion of tips and overtime that is applicable.
So let's just simplify this. If I make $100,
yep.
Then if that's my income,
mm-hmm.
and I make $25 in tips, then I can just lower my income to $75, and I pay tax on that $75.
Correct. Yep, that's exactly it. But then there are the limitations. So not everybody, but there are some people who make more than $25,000 in tips. When you're above $25,000 in tips, that portion is taxable. And for overtime, it's only $12,500, which a lot of people make over that in overtime. Yeah, especially guys in Oklahoma, blue collar workers and stuff. They're making a lot of money in overtime. They're still going to have to pay taxes on a good portion of it.
Yeah, that's definitely a big reduction from the promise. When you say no taxes on something, and then there is actually taxes on it.
Yep.
And
there are some income thresholds too. If you make over $150,000 a year, which again a lot of blue collar workers and trades guys do, you actually don't get the deduction at all.
Wow.
It starts to phase out.
Huh. They always find a way to screw you, don't they?
Well, when they end up doing the math, they try to make it seem really good, but then they put all these little limitations on it that aren't as good as you wanted it to be.
Well, yeah, because at the end of the day, it's a simple equation as far as revenue into the government is literally taxes and fees.
Mm-hmm.
So when they start to cut taxes, they're cutting the revenue, and now they got to figure out where do I cut it out of the budget.
Well,
And
really, they go, how do we actually tax them on somewhere else?
right,
to get
exactly.
that money?
That's what I'm saying. If they don't want to cut it out of the budget, they got to make it up somewhere else.
Mhm.
So
Yeah, and unfortunately, it's usually people who make about $100,000 to $1 million in that kind of income range. Those are the ones that pay the most. They get hammered.
and I was thinking, a lot of the people that get tips, hospitality workers, things like that, restaurant workers and all that,
Mhm.
they're not in those upper income brackets anyway.
No, and so they're gonna benefit from this.
Yeah.
People who are servers or waitresses, baristas, those kind of little jobs. Not little, they're jobs that we need, but those jobs, they will benefit most from this situation. Yeah.
Well, that's a good thing then.
Yeah, it should be good. It should be good. But anyway, got to read the fine print on all of these big proclamations. I feel like our president likes to make these huge proclamations and people buy into them, and then they don't read the fine print. And when they go to do their taxes, they're going to be real angry at people like me. So make sure you understand before you.
It's just like those credit card offers. What the big print giveth,
Yeah,
the small print taketh away.
that's exactly what it is. Well, part of our show is we like to answer some questions. So do we have any questions from the audience or viewers or just you guys sitting in the room?
Or anything, anybody.
What are some of the most significant tax changes from the Big Beautiful Bill?
Well, taxes and tips are one of them. The big one that everybody's talking about in the business world is the trying to bring back manufacturing to the states. And so if you build a new manufacturing plant, you actually get 100% bonus depreciation on that building in the year that you built it, which is big because depreciation for commercial structures is usually over 39 years. So now if you go spend $2 or $3 million, usually of the bank's money, building a big construction facility or a big manufacturing facility, you will get a bonus reduction of that amount. So that's the big one. There are a ton of other ones. I don't know them off the top of my head because I'm not a super smart guy, but I can bring them up.
So they extended the business tax deductions, right? Is it still at 20%?
It is. Yep, they've extended those.
So yeah, that was something. Another one though that went down though is the subsidies for healthcare. So people are seeing a huge spike in their healthcare because they are no longer going to get a tax reduction for that. So
Yep.
subsidies are not going to be able to be taken off of their taxes. Wasn't that how it was before? So they subsidize it, but it's actually a reduction in your tax.
Mm-hmm. Yeah. Yep.
That's how they paid for it, but now it's gone.
Yep. So the One Big Beautiful Bill Act, it extended a lot of the tax or a lot of the deductions and base amounts from the 2017 Tax Cuts and Job Acts. It increased the standard deduction, that's a big one for most people. It also gave us a little bit bigger of a child tax credit. And the other big one for people who do itemized deduction is the SALT deduction cap, which is the taxes that you and the real estate taxes, sales tax deductions, those kind of things. It goes from $10,000 to $40,000. So if you're if you do itemized deductions on your taxes, it's a big help. And then the clean energy tax incentives. So
Now that's huge.
it is, yeah. A lot of those kind of benefits for getting the electric vehicle one is gone, but some of these clean energy ones, like getting solar going or wind power, geothermal at your house and stuff like that, you get some big tax credits.
So I could have locked in the tax credit on the solar if I had contracted to get solar on my building before the end of December.
Mm-hmm.
But I didn't do that. But what it would have been if I had gotten $125,000 in solar, the actual cost to me would have been eventually only around $35,000 or $40,000.
That's correct. Yeah, but you got to be careful when you do solar and clean energy on your home because those deductions, those credits that you get back, are non-refundable. So you're not getting money back in your pocket. It just reduces your taxes. So if you didn't owe taxes already,
Right.
you're not getting more money back. And
Right.
I've had a lot of clients get real upset with me when they come in and they are a W-2 worker and there's already been, the amount is already deducted. And I say, well, you didn't get a big refund like you were promised. A lot of these sales guys will promise that, you'll get a $6,500 refund on your taxes, and it doesn't happen, and then they're mad at me.
Right, because they didn't have 6,500 in owed taxes to
Right.
take off.
Right. So it only counts as a credit.
Right.
So
Well, they don't get it as a credit in the future, though.
it does carry forward. Yes.
It does.
But if you're just a W-2 worker and you already have that money kind of deducted, you're not getting an extra 6,500 back as the ticket. It
Right,
just
I
is
see what you're
lowering the
saying. I see what you're
taxes.
saying. So
Yeah.
so over time, they're still going to be able to
You'll
get
get the benefit. It's just not as
Right.
great as sometimes people are sold.
Okay, for home solar and stuff, but they probably do the same thing for commercial. Some of these
Yeah.
guys.
And one kind of last thing to mention that's cool, and if you work for a big corporation, you should talk to your employers about it, is they've increased these kind of credits that big corporations can get for childcare. And so it's gone up to, I think, $900,000 in tax credits that big companies can get for providing childcare to their employees.
But now, is there any benefit there for small businesses?
It can be, but most small businesses can't afford that even with the credits because there still is a cost out of pocket. That's one of those kind of benefits you see that larger companies will have. They'll have childcare for their employees.
Why do we pretend to care about like life and the quality of life, and then we don't invest in things like that, like childcare? I mean, wouldn't it
Yeah.
make sense that just as a society that we invest in raising competent, capable, smart, safe, ethical people from the very beginning? Like, it makes no sense to me that, I mean, I know I'm going off on a rant here, but as an investment, as a business investment, it would make sense to me if the government and industry would invest in things like quality childcare so that parents can work and be productive and know that their kids, are being cared for and educated properly in the time that they're not around.
I agree.
Yeah,
It would
I
be
don't know
an
what to
investment
say
in the
about
future.
that. I mean, it's like, I'm kind of going off on a rant here, but how are we pro-life if we're not pro-whole life?
Yeah. Well, there you go. Any other questions?
You kind of just hit on the second question, what they asked. Is there anything else that small businesses should be paying attention to in regards to facility improvements?
So the facility improvements, it does not count under the manufacturing deduction or depreciation that people get. It has to be a newly constructed facility. I think you can purchase and upgrade a new facility, but you have to have bought a new place or build a new manufacturing plant in 2025.
Is there a threshold on what is manufactured or how much volume?
Well, so it's not a volume, but there is there's a lot of fine details on what qualifies as actual manufacturing. You have to be making something.
I mean, like if someone's making like knitted beanies or something and they build like a 10,000 square foot warehouse around their rocking chair.
That is a good question. That may qualify. I haven't done a lot of them, but I think if you have a small business and you are producing or manufacturing something, the facilities that you build will count as this deal. Now, I don't know if somebody doing a beanie needs a 10,000 square foot facility.
Well,
but
that's the question,
it has to
right?
Be,
It's
it has
like-
to
it's
be
like, where's the
reasonable.
balance, right?
It has to
Yeah.
be reasonable. With all
Yeah.
things with the IRS, if you are reasonable in your argument, and there's when we fight with the IRS sometimes on certain things, the term that comes up a lot is reasonable basis. If you have a reasonable basis for a deduction that you want to take, it is a actual business expense that you need and furthers your business, it is almost always deductible.
So my question is this: I understand the intent of some of these things that they do, right? Of course, we want to encourage more manufacturing here,
Mhm.
and that's a whole other discussion, by the way, because we have had in the past 15 years or so, we have had a major renaissance in small volume manufacturing in the United States.
Mm-hmm.
And part of the reason why we've been able to have that is because of the fact that small manufacturers in the States have been able to source their raw materials and their parts from overseas.
Mm-hmm.
So they've been able to bring them here, create small facilities with say 10, 20 people manufacturing goods, and create a company that makes $1 million a year
Mm-hmm.
and employ 20 people.
Yep.
And then when the tariffs came in, they destroyed so many of these companies. Now we're back to the saying, oh, well, if you build the manufacturing here, but people did build the manufacturing here,
Mm-hmm.
and they still have the same problem that all of the resources that they need are not here.
Yeah.
So I understand the intention of these things, right? Like, okay, we can deduct a whole building or a whole manufacturing facility in the first year.
Mm-hmm.
But if you don't have the revenue basis to owe the taxes to deduct that, then
Well, those deductions carry forward.
they carry forward.
They
over,
always carry forward. And that was one of the things I believe from Trump's 2017 Tax Cuts and Job Acts was that now a lot of these deductions that you needed to use up quickly they'll carry forward indefinitely.
now they're permanent. So just let me make sure I got this straight. So when you said it was over 39 years, so let's say if it was $1 million, it would be $1 million divided by 39, and
Correct.
then each year you would be able to deduct that much.
Correct.
Now you can deduct the whole $1 million
In year
up
one.
up to the $1 million in year one.
Mm-hmm. And you can even show a huge loss. Like you can show a $900,000 loss in year one, and then that $900,000 will carry forward. So then the next year you'll have an additional $900,000. If you don't use it all up, the next year you can use some of it then. And so basically, in the initial few years of running a manufacturing facility, your taxes will be zero until you break even.
Okay.
Yeah.
So that sounds like a pretty good deal.
It is. It's a really great deal. Yeah.
Yeah.
And there's a lot of people taking advantage of it right now.
All right. And that's just going to be, is there a time limit on that, or is it just part of the law now? And
so right now
whenever?
it's a part of the deal. There may be an end date to when you have to have started, completed, or put into use the facility. But right now it's active. So if you're buying and putting into use facilities over the next few years, you should be good, at least till 2028.
All right. Well, I think it's time for us to start thinking about that. You
Yeah.
mentioned that a couple months ago.
I
And
did, yeah.
I kind of blew it off because I was dealing with all the pool room stuff.
Mm-hmm.
But yeah, maybe that might be a time to revisit that.
It is, yeah. Any other?
When you're talking about reasonable deductions, who chooses what is reasonable? Like, can they come back and hit you and like we don't think that's?
We are the government, and we are here to help.
It's a great question. So there's a lot of established tax law that determines what is reasonable and what's not reasonable. There have been tons of fights with people saying that they are trying to deduct something and the IRS says no. So there's already pretty established guidelines for a lot of things. But what we call, there's kind of two categories of expenses or write-offs as people talk about. The first one is a cost of goods sold. So what direct costs are associated with either producing the product that you're selling or providing the service that your company does. So that's a cost of goods sold is a direct cost. So the raw materials, the labor input, the shipping of sending it to customers, the packaging, things like that. We have a direct cost. Or if you're in a service business, like your direct labor, your software, those kind of things. Those
Cost
are
of your car.
Yeah, those are costs that are directly associated with making the money. And then there are another category of expenses called ordinary business expenses. So things that are ordinarily associated with the running of the business. And a lot of those are classified in industry codes. And so when you form a business, you select kind of what industry you're a part of, and that can determine a lot of what is reasonable. It is very reasonable for a pilot car company or a hotshot trucking company to have 120,000 miles in deductions a year. You know, huge fuel costs, huge auto repair. It is not appropriate for an accounting firm to have that many miles. You know, if I'm driving that many miles, it's because I'm doing personal stuff or I'm in a weird business. But that's not what would be considered an ordinary one for that industry.
That'd be a new business, though, Scott.
It could be, you know, traveling accountant.
Yeah. You know,
But-
bedside accountant.
But it's not a usual expense. And so there's a lot of those. But then there are unusual ones, and sometimes those have to be argued with the IRS. And Tiffany in our office does it all the time. There are sometimes just extraordinary or unusual expenses that still qualify because they are reasonably associated with the earning of revenue. Any money that you spend in the pursuit of earning revenue or earning income for your business is a reasonable expense. There's actually kind of a funny story of a lady who deducted a yacht. And yachts are very clearly outlawed in as a luxury item. Lots of people don't want to. You can't deduct it. It's been used as a loophole too many times by rich people. And that's another thing. All these laws are in place because somebody already abused them,
Right.
and that's why they have case law and we use this term reasonable basis. But this lady, she's a real estate agent, and she tried to deduct her yacht, and the IRS was like, no, that's crap. Well, she hired tax attorneys, like we have in our office, to go fight for her. And the reasonable basis is that she invites clients onto her yacht and takes them on a tour in Miami and shows them the house from the water.
From the ocean, yeah.
And that's how it is deductible. It is used in the reasonable course of her business and therefore is an ordinary business expense.
And they accepted that.
They did. Yeah, well, I think they did. But that's
Well,
at least the story I got.
But she made a logical case.
She did.
That sounds like a very logical case.
And that's where that term reasonable basis comes from. If you can make a reasonable argument that a lay person or a normal person would say, that makes complete sense.
I would almost bet that Trump deducts the cost of his helicopters flying around Manhattan in the same manner.
You know,
you want to buy a $600 million building?
If you are at that level, private jets, helicopters, those kind of things are deductible.
Yeah.
Because, you know, if you need to get to the office and your time is worth, you know, I mean, we can talk a lot of crap about him as a businessman, but he makes a lot of money. And so if we actually boiled that down to it, he probably makes several $100,000 an hour. An hour commute is a waste of time for him. He needs the helicopter to do his business. So it's a reasonable expense.
No, but I was just thinking about like just flying people around Manhattan and saying, look, that's my building.
Yeah,
no,
yeah.
not as a tourist,
Oh,
but
yeah,
you know,
yeah.
like he does sell
Mm-hmm.
he does sell buildings. He sells high-end real estate, and literally flying someone around and saying, this would be your view from that condo in my building. You know, I mean,
Yeah.
I think that a case could be made just like the yacht lady.
Yeah. But anyway, to recap, because that was
Sorry.
kind of a long explanation, is there's already a lot of established acceptable terms. There's already a lot of case law that dictates kind of what is acceptable and what is not acceptable. But if you have a reasonable argument that this expense should be a business deduction, then you should make it. You should absolutely make it. We're pretty aggressive here when we file tax returns. We don't mind dealing with the IRS, and we don't mind as long as everything has a reasonable basis and a good argument, you should deduct it.
All right. Well, I'll work on that for next time I play a set for $1,000 at the pool room.
Not
so
deductible. That's
I
gambling.
so I can reasonably say I'm introducing people to a beautiful new smoke-free environment.
Yeah.
You know.
Advertising expense.
Yeah.
What do we got?
A lot of people are saying workers should get a larger income tax refund this year. Is that part of the New Deal tax law as well?
So the two reasons for that is the increase in the standard deduction. So the standard deduction went much higher. If you itemize the itemized deductions that you can take went higher. So that actually lowers your taxable income. A standard deduction is taken if you're a wage worker, W-2 worker, and you make $50,000 a year. The standard deduction is, you know, I forget what it is this year, but let's say $25,000. It reduces your taxable income down. And so having a higher standard deduction lowers the taxes that you end up having to pay. So yes, there should be a not a substantial, but there should be a somewhat noticeable deduction in overall taxes for tax year 2025 and moving forward through 2028.
And the increased child tax credits, are they
Yep.
applicable for
I believe so.
2025?
Yep. And if not for 25, for sure for 26, but I believe they are for 25. So you should have, if you have kids, you should get a bigger refund. If you're a single and a worker, you should still get a bigger refund because of the increase in deductions. But two, refunds are only if you pay in to the government ahead of time. So it's your money that they're taking. When I worked as a W-2 worker, because I'm an accountant, I had zero withheld. I put like exempt on my W-4, and they withheld zero. But then every quarter I made estimated tax payments, which is legal, but I don't suggest it. But if you're getting a huge refund, it's because they're taking money out of your paycheck every month. They're taking too much.
So some people, and correct me if I'm wrong, but don't some people like basically let the government take as much as they can so that they essentially use it as a sort of a savings account?
It's 100% correct. Yeah, they use it as a savings account. If you're kind of, again, not talking crap on anybody, but if you just know yourself and you're not the best with money, it can sometimes be a big help to get 5 or 10 grand at the end of the year. You just get a big balloon payment. That way you can spend it on something fun or pay off some debts or take a vacation. If you are better disciplined and good with your money, you should have them withhold the correct amount so that at the end of the year you owe zero or within $1,000. That's the way to do it.
And then you take that money that you would otherwise be withheld and put that in somewhere else where you're actually earning money.
Put it in as savings, get it into an IRA, use it for something that you need, some kind of investment. But again, not judging either way. And, sometimes people still have with zero withheld and they get refunds because of the child tax credit or the earned income credit,
Can people learn these things on our other podcasts that we have for Dylan, what is your podcast called? Sense of Direction, right?
Sense of Direction.
Don't we discuss those on a lot of those strategies on there?
If you find yourself kind of in a poor financial situation or not quite understanding what to do with your money, Sense of Direction is the podcast for you. Yeah, absolutely. New episode out tomorrow. They talk a lot about, money management, budgeting, IRAs, how to read your paycheck, financial stuff like that.
I think that I need to turn some of our Chester's employees onto that.
Yeah.
Because they need to understand that making $1,200 a month and taking on a $900 car payment is not a good idea.
Yeah, unfortunate.
So,
we have any more questions?
Yes. Should I expect to see no taxes taken out of my overtime hours going forward, or does that come back later?
Taxes taken out of your check it's a little bit goofy. So it depends on how much overtime you're taking. So payroll software in general is a little strange in how it works. It just works on tax tables. And whatever you get paid on one check, the software assumes that's the check you're going to receive every single time. So if you just receive a small amount of overtime and you were to multiply that by however many paychecks you receive in a year, and it's under the overtime limit, so the $12,500, yes, less taxes will be taken out. But if you have just like a couple times a year or maybe like a short time a year where you have a bunch of overtime, the software may think that you're going to get that same kind of overtime every time, and therefore it'll calculate that you might make over the threshold and it'll withhold the correct amount. So don't put too much stock into exactly whether the withholding is 100% accurate if you have kind of a big paycheck one time, because it ends up withholding a little bit more. That software does not work great. But in short, theoretically, you should see more money and less withholding if you have a little bit of overtime. Yeah. I hope that made sense.
That didn't make any sense to me, but I do understand the software.
Sorry.
It's because I think right, in my limited brain, it's like you work a certain amount of hours, you plug it into the software, it just withholds what it withholds. But
yeah.
So you're saying it's predictive.
It's predictive, and so if you make like $1,000 one week, it withholds the correct amount of taxes for if you were going to make $52,000 that year. But then the next week, if you make $2,000, then it's going to say, well, now he's making more money. We think he's going to make $104,000 this year, so it's going to withhold that right amount. And so, but then if you go back to the 1,000, then it predicts, well, now it's only
earlier,
this much.
yeah, I get it. Earlier, you said that you had basically zero withholding, but you made estimated tax payments every quarter. So you were saying to the IRS, "This is what I think I will owe."
Correct.
And you were just calculating that yourself.
I just
Whereas
calculated,
other people who get a wage or who get a W-2, basically that's happening with the software that's deducting
Correct.
it instead of doing a straight calculation every week based solely on those hours. It also estimates based on what it thinks that
Right.
you will earn.
Right.
Okay, I got it.
And the software does take into account what you've worked before. So if you're on the same software, like, by November, it's got a pretty good idea how much you're going to make. But in those first few paychecks, sometimes it can miscalculate. It can over withhold or under withhold a little. Usually it errs on the side of over withholding.
How should people how closely should people be paying attention to this? Is it something that errs to their benefit or
Well, the income tax withholding, the federal tax withholding and the state tax withholding, usually, like I said, it usually rounds up and takes a little bit extra if it's a little unsure. And so it is in your favor. Very rarely do people have way too little withheld and then they end up owing at the end of the year, which is the worst that can happen, obviously. Most of the time, too much is withheld. And so the question is how much should they pay attention? Well, it depends on how much you're paying attention to all your other finances. This is just one part. If you are a set it and forget it person, have the maximum withheld and just move on with life. At the end of the year, you'll get a big check. If you want to try to get as close to accurate so that at the end of the year you owe zero, you should be paying a lot of attention. Yeah, you should be checking each paycheck. You should have a spreadsheet in your budget, and you should be making sure that enough's getting withheld. And if not enough's getting withheld, then you need to talk to your HR department and make sure that they withhold a little extra.
Yeah. I'm a set it and forget it person, so I'm the person that Netflix gets 3 subscriptions every month out of me.
Most people are. And it's a fine idea, to be honest with you, if you just get a big refund at the end of the year and you stick it into an IRA, it's the exact same kind of earning potential as if you were right on the level. The problem that I see, though, too often is people end up living, we talk about living paycheck to paycheck. They end up living refund to refund. They get their refund and they basically pay off all their debts that they accrued from the year before, and then they end up accruing more debts, and then they pay them all off, and then they accrue more. And so it can be kind of a vicious cycle.
And is that partially because of the whole predictive nature of what we might owe, or anything to do with that?
No, that's just poor money management, and
Okay.
poor financial management.
So we should learn better money management.
And honestly, it's just really expensive to be poor. Like, it really is. It's so expensive to be poor in America.
Do you know, I had a friend of mine who, unfortunately, I say, made his money off of poor people. He had one of those catalog things, like the Finger Hut type of catalog deal.
Yeah.
And his was a different brand, but he basically would extend credit to people, Christmas time, stuff like that, through his own little catalog, and just charge exorbitant interest, right? But these people, that was the only way they could get
nice things
for Christmas, right?
Yeah.
And he reportedly had a fortune of around $60 million at one point.
All in interest.
Yeah, and then basically the internet killed him.
Yeah.
With that. But yeah, he was making a lot of interest off poor people. But I know another thing was, like, check cashing, things like that. They don't have the unbanked, pay more to cash checks.
They pay more. Those payday loans are disastrous. People get in a vicious cycle with
I
those.
have never understood. Okay, I pay somebody with a check drawn on a bank. Let's call it Chase, right? Just for sake of an example. I give you a check drawn on Chase. You don't have a Chase account. You go to Chase Bank and they charge you a fee to cash that check. Where's the logic in that? That is ridiculous. That ought to be illegal.
I agree with you.
Like, yeah, it is expensive to be poor in America.
It's just
every disaster, every broken car, everything just costs you more to do it. Like, that is one thing I've learned now since I've been successful, since I've been able to manage money better when dealing with you. The more money you have, the more you can walk into a place and literally, they're willing to negotiate with you. It's like they want your business for some reason.
Things get cheaper.
Whereas if I were, poor, they would just quote me a price and say, take it or leave it.
Yep.
And I don't get it.
I don't either. It's like the richer you get too, the more free stuff you get sometimes from people. It's wild.
Yeah, and we just do that. Like even like if some semi-celebrity comes into my place, right? I'm falling over myself to give them some beer and give them this and that and the other. And it's ridiculous, and I should never do that, but I do it because I'm just, starstruck or
charge
whatever.
them double.
Any
other questions? Nope. All right. Well, thank you very much for joining us. We are here every Thursday at 4:30 Central Time, doing live shows, answering questions. If you're still with us, and maybe we should clip this out and spread it around, but we are doing a business plan competition right now. So submissions are open. Our information is on turtlesmith.com. Submit a business plan to us. It closes on March 31st. And we are going to pick a winner during the month of April, and that winner is going to get $1,000.
$1,000. That could be the start of your new empire.
No catches. We will just legitimately ACH or wire or mail you a check for $1,000 if you are the winner. We will also, if you want it, offer some mentorship or guidance to help you get it off the ground. Not mandatory in any way, but we would like to see, if you get it going, how it turns out.
We'd like to interview them, though.
Yeah, for sure. And we're going to have some pitches live from the top finalists, so it should be kind of fun. But check us out, turtlesmith.com, at turtlesmithok on all of our socials. Check out our Patreon. We're going to have a bunch more information. And come back if you have any more questions.
All right, man. Sounds good. Well, we'll see y'all next time.
I'm Scott Hess, tax and business consultant.
I'm John Barton, small business owner. Remember the tortoise and the hare? Slow and steady wins the race.
We started Turtlesmith to help people start small businesses, providing information and resources to small business owners and entrepreneurs.